Good morning. This is Dylan Jovine with Behind the Markets. Happy Wednesday. Today's Wednesday, April 1st. April Fool's Day. Happy April Fool's Day. And I have something for you that is going to sound like it's an April Fool's joke. Amazon has not been this cheap since the 2008 financial crisis, the Great Recession. And it also is trading at a discount to Walmart for the very first time in its history. And this is despite the fact that Amazon's top line growth is expected to be around 12, 13%, where Walmart's top line growth is expected to be around 5%. Unbelievable. Or consider Nvidia. Nvidia is trading, and this is shocking to me, at its lowest forward PE in 7 years. 19.9. It has not been this cheap on a valuation basis in 7 years since before the AI boom. Consider Apple, by contrast, is trading at 28 times forward earnings. Or consider Microsoft, like Nvidia, it's selling for about 20 times forward earnings. Same with Meta. It is unbelievable. What a gift down markets are. I love down markets because you get to buy really good things at really good prices. It's really unbelievable. So why are these stocks down? Basically, Wall Street is not happy with the spending. They don't think the AI spending is sustainable. Look, one of two things, which is great. I'll tell you something. It's tricky. I understand where Wall Street's coming from. These firms are spending $100, $200 billion a year on AI spending. And Wall Street is saying, we don't see a clear path to ROI for that kind of spending. So we can't control you. We're just going to sell your stocks and run away. We're going to opt out, so to speak. So look, I view these as great discounts because let's play the tape here. Wall Street is thinking, every quarter, they're up this competition. Every quarter. Hedge funds are like, I got to post good numbers for the quarter. Mutual fund managers, I got to have good numbers for the quarter. Everybody's like, I got to have good numbers for the quarter. Got to have good numbers for the quarter. But if you have a little bit of a longer term view than a quarter, you could say to yourself, look, one of two things is going to happen here with this spending. Either, number one, they get an ROI on this $200 billion a year and the stocks soar over the coming years, or they don't get an ROI and the companies stop spending this kind of money and the stock soars. So either way, it's crazy. Either way, I see a lot of companies in the tech sector that look really historically cheap, obviously. Ironically, we've been talking about Nvidia's secret supplier. They haven't sold off. They've been bucking the trend, and they look like they're really ready to soar after we've been talking about them for a while. It's really cool with their new releases and new chips. And there are a couple things going on here. If you put the war aside, you got to think to yourself like a private business person. What companies would I like to own as a private business person? Are these companies cheap as a private business person? Would the Iran war affect you from buying a business privately or starting a business in your personal life? Of course not. Would the price of oil impact that? No. If you're going to start a business, you're going to start a business. You're going to invest your money to start a business, your money and your time. And that's how I look at these. I have a little bit of a longer view. I don't think I got to make money this quarter. I think, okay, how's this going to look in 5 or 10 years? Will these companies be dominant in 5 to 10 years is like a most likely outcome. Will they likely be selling? Will they be earning more money in 5 to 10 years? Very likely. Will they be at higher valuations over 5 to 10 years? Very likely. Will I be able to get 15 to 20% on my money over time over the next 5 to 10 years? Very likely. And the great thing about sell-offs is you can buy great companies you don't even have to worry about. You're not going to worry about it. If Nvidia goes down, you're not going to worry about it. If Amazon goes down, you're not going to worry about it. If Meta goes down, you're not going to worry about it. Microsoft goes down, you're not going to worry about it. You know that business is going to be fine. That's really the high probability bet. So I love owning great businesses where I really don't have to think or worry about whether the stock goes up or down one day. It doesn't really matter to me. I just put those away, and I know that over time, those kinds of investments do very, very, very well. and they don't stress you out. They don't stress you out. So a month or so ago, when the work kicked off, we said put the 4-step playbook into effect. Get rid of your weakest positions. Get a shopping list of stocks. Put your money in short-term U.S. Treasury securities, and then get a shopping list of stocks and get ready to pounce. We are now at step 4. Get ready to pounce. Some of these look very, very attractive to me at these valuations. Anyway, that's all I have. Have a wonderful day. I will speak to you tomorrow.